is Zillow COO Spencer Rascoff. Spencer, thanks for coming on the show.
Thank you.
You know, it's striking when you and I were talking earlier about the fact that if you think that the housing market is bottoming out now, there's so many reasons that you don't think it is. You think price declines are going to continue. You think record foreclosures are going to continue. What does it take to turn this market around?
Yeah, I mean, I remain pretty bearish. I think we have a lot of problems still on the horizon. To turn it around, you need a couple things to happen. First of all, you need some stabilization of unemployment. Second of all, you need mortgage rates to stay low, and I'm worried about what's going to happen to mortgage rates when the Fed stops buying mortgage-backed securities at the end of the first quarter. Third of all, you need this steady stream of foreclosures that bring on more distressed inventory onto the market. You need that to slow. So you have to look upstream to see what's actually causing the foreclosure crisis as a way to try to make sure that prices stabilize.
All right, that's a good point, Spencer. So let's look upstream. What are you seeing?
Well, the problem is that now foreclosures have really become mainstream. So, you know, if you look at 2006, for example, back when home values peaked, the top 1/3 of homes by price constituted only 16% of all the foreclosures at that time. Today, that top 1/3 constitute about 30% of all foreclosures. So foreclosures now have even gone high-end. It's now, you're just as likely to see a foreclosure that's high-end as normal, as a lower-end home.
Is this what typically happens, though, in a housing downturn? You know, give us some history and some perspective. I mean, does the high-end kind of hit the market, the foreclosures last?
Yeah, well, two things have happened there. The first is that typically higher-end homeowners put down more equity when they bought their home, so they had a larger equity cushion, and so you had to have a longer period of price declines for that equity cushion to get eaten through. So that's one of the things we're seeing. And secondly, high-end homes have maintained their value better than lower-end homes. That, however, is no longer the case. Now high-end homes are declining and kind of catching up to their lower-end homes.
But does this point, I mean, does this point to the end? If we see the high-end homes finally getting hit, does this mean soon the pain will be over?
Well, we're closer to the end than we are to the beginning. I'll say that. But no, I don't think, we still have a ways to go for home values to decline. So Zillow's data shows that we're probably at least a year away from a nationwide bottom in home values, although it's important to note that it's very market specific. Some markets like Boston, for example, we think has already bottomed. It probably bottomed earlier in 2009. So each market is different.
I mean, the other interesting thing is, Spencer, I mean, as we start to see some upticks in the housing market, those people who were just so discouraged and pulled their house off the market, they come back in, correct? And that puts even more, obviously, supply into the market and more pressure on prices.
Yeah, you know, there's this thing we call pent-up supply, which is scary. You know, when we do surveys of homeowners, about 1/3 of Americans say they would like to try to sell their home if they saw a bottom in their particular micro market in their neighborhood. So there's an enormous amount of inventory waiting in the wings, not even distressed inventory, just kind of normal people who ordinarily would have sold their home but have been waiting over the last couple years because they didn't want to sell into this market. And I am worried about that excess supply coming online as well.
Well, and it kind of ties to another one of your fears, if I can call them that the Fed will stop buying mortgage-backed securities in its program that they are planning on ending soon if they don't extend it. You think that could boost mortgage rates by 100 basis points? What would that do?
Yeah. Well, it's been a very successful program, and you know, the Fed keeping the Fed fund rates low and also buying agency debt and mortgage-backed securities have created a great period of low interest rates and low mortgage rates. You know, we're sub 5% now for 30-year fix and close to 4% for 5/1 ARMs or 3/1 ARMs. So it's a great time to be able to get financing if you can close that mortgage. The problem is when the Fed stops these programs, you know, it's going to be between 50 and 100 basis points of lift in terms of mortgage rates. And what that would do, you know, think about what that would do. To a buyer, that means that they just lost upwards of maybe 20% of their buying power. So what few buyers there are in the market, all of a sudden, all the homes they're looking at would basically get 20% more expensive. They could buy 20% less home. So I'm worried about what happens when the Fed stops that subsidy to buyers.
Spencer, help me out, though, because you say that there's still kind of more pain to come. I mean, when do you think ultimately we will indeed hit bottom when it comes to this housing cycle?
Well, I think what's going to happen is about a year from now, kind of mid to late 2010, we will see a nationwide bottom in home values. Again, some markets will hit before then, some will be after, but nationwide, we're still about a year away. And then the new normal is going to be a period of slow appreciation. I think you're going to see low single-digit appreciation, maybe even flat home values for at least 5 years. And Zillow's data thinks it's going to take about 15 years to return back to the 2006
15
peak
years.
Wow.
15 years
to return
until we get
back to the peak.
So it's a lot slower than the equity market. I want to get back quickly to a fact that we led into you with, and that is 1.4 million homes, a million mortgages are 90 days late or more, and they haven't been foreclosed upon yet. Basically, 200,000 of those are more than a year late on their payments. Why is this, and what happens?
Yeah, well, what happens is banks are overwhelmed. I mean, the infrastructure and the foreclosure process infrastructure in the banks, in the loan servicers, in the courts were designed for a time when foreclosures were pretty much a rarity. And so the system is just overwhelmed. So, yeah, there are over 1.4 million homes that are basically waiting in the queue to become foreclosed upon and haven't even been foreclosed upon yet. And, you know, what that means is that those homeowners are just kind of waiting. You know, they're skipping mortgage payments. And they come home every day kind of wondering whether today will be the day that their home is foreclosed upon. But for the system as a whole, it's scary because not only do we have pent-up supply from non-distressed homeowners who are waiting for a bottom to sell, but you have this shadow inventory from kind of latent foreclosures that are waiting to come online. So the supply picture is scary in terms of how much more inventory might come.
Yep, still sounds rather ugly out there. Hey, Spencer, thank you so much. We appreciate it. Spencer Rascoff, Zillow's COO.